So is the market crash over? We've had about an 18% rally in the stock market since the bottom just a few days ago. And we had an article from the Wall Street Journal come out a couple days ago that said, hey, we are in the new bull market after the fastest bear market in history. So the question of the day is, are we at the end of the crash? Are we on the recovery path? Did the Fed and the stimulus bill essentially and effectively bail us out and rescue us from this financial crisis? Or is the worst yet to come? Let's dive in. Of course, the worst is yet to come. It is really ridiculous the lack of historical knowledge that some of these economists have. It's really just astounding. In a bull market is going up, right? So in a bull market, a correction goes down. That's why they call it a correction, because it corrects for the movement upwards that was too fast or too much. So in a bear market, when the market is falling, a correction is going to be up. And so that's all this is that we've been seeing over the last few days. It's called a bear market correction. When you have a severe bear market in a severe recession / depression, your corrections look enormous compared to normal market movements. We've had the most volatile market that we've ever had in the history of the stock market. We've had the biggest up days and the biggest down days. Like I said, we're already up 20% from the lows just a few market days ago. Now, if we take a look at the chart here, I'll throw it up on the screen. We've spent the last 4 market days now trying to get above this resistance point in the S&P 500, in the Dow, and in the Russell 2000. Now, the S&P 500 has held up a little bit better than both the Dow and the Russell 2000. Those ones, they've kind of been hitting lower highs for the last few days, whereas the S&P 500 has continued to hit the same high for the last couple of days. But when we take a look at the longer term charts, we can see that this is very, very closely correlating with previous support and resistance in market action from past years. From a technical perspective, this is a bearish case for the markets. It is looking like it has tried to get above these resistance points, and it has not been able to, and so we are likely to see a sell-off. Now, I'm going to throw up another picture on the screen here for you. This is a chart that shows the stock market action during the Great Depression. And you can see how many times there was about a 20% rally in the stock market during the course of its overall bear market. This is one big bear market. And so every single time in there, people thought, hey, could this be the end? Could this be the end? So one of the reasons why we know that this is, the worst is yet to come here is in unemployment numbers. The unemployment numbers that came out last week, the 3 million or so, those were largely not suppressed, but there were all the reports weren't in, and there's very likely to be a lot higher unemployment numbers coming out soon. Free money, printing money can't fix unemployment. They can't fix people not going and buying things. It can't fix people not going out and doing things. It definitely cannot fix a consumer-based economy, which is what the U.S. is. We don't produce hardly anything ourselves, and so just printing money doesn't really accomplish anything when you have, at the very, very least 3 million people out of work. Okay, so we're likely to see some more bad unemployment numbers hit. Number 2, from a technical perspective, from the charts, it looks like we are about to have another drop in the stock market. We've had a little bit of a consolidation, a little bit of a drop in the VIX, which is the volatility index, which measures the fear in the market, and that has dropped. There have been a lot of people looking for deals. Hey, is this the bottom? I want to be able to buy stocks when they drop. And so we've had a lot of FOMO buying at these levels right here. And so that is likely to turn around as well. That fear indicator, the fear sentiment, is not as much present right now as it was, a week ago and 2 weeks ago. So essentially, none of the fundamentals are looking up at this point. None of the fundamental issues with the economy have been fixed, and the stimulus package didn't really fix any of that either. I love what Peter Schiff says about what's going on right now. He says it's what the American government is doing right now is similar to somebody who just lost their job deciding to install a pool in their backyard. spending money, going further into debt, and just being more financially irresponsible that's not a way to fix fundamental financial problems. It just doesn't work that way. Okay, what is going on in the gold markets right now? We've seen open interest in futures contracts drop drastically. They've been continuing to drop. It's an indication that bullion banks are backing off from their naked shorts on the gold markets and the precious metals markets, which in theory, once those are completely unwound, it should allow the price of gold to, the paper price of gold to naturally catch back up to the physical price of gold and silver, which right now premiums are through the roof still, and it's almost impossible to track down any physical gold or silver right now if you're looking to buy some for a number of reasons, but ultimately there is a supply crunch, there's a demand surge, and when you put those two things together, you're going to see a very difficult time in acquiring something. Okay, and finally, what is happening with the credit markets, the bond markets, treasuries? The Federal Reserve, like I've mentioned over the last few videos, has opened up every single facility and program they can to buy and accept as collateral all the debt possible and exchange that for dollars. So they've opened up all of these different facilities in order to basically exchange that. Their balance sheet from this has exploded. In the last 2 weeks, their balance sheet has increased by more than entire year's worth of quantitative easing back from the financial crisis. And so their balance sheet is absolutely exploding right now because they have really quickly tried as strongly as possible and as fast as possible to swap out all of this debt in the market for dollars in order to try and prevent that debt from being sold at fire sale prices that would kind of make the financial system grind to a halt. And their main focus is treasuries, because if treasuries get sold off into illiquid markets and there aren't enough buyers to soak up all of the selling, that will drive the price of treasuries down, the yield of treasuries up, and then for the government to be able to issue new debt, it will be more costly and potentially too costly to roll over their existing debt to be able to pay the interest that it would owe on their existing debt. And a lot of the US government's debt right now is short term and needs to be continually rolled over. And so the Fed is doing everything they can to buy up all of the treasuries from everywhere as fast and as efficiently and as effectively as possible so as to keep those rates low. Okay, and then finally, tomorrow, Wednesday, April 1st, I promise it's not an April Fool's joke, it's just unfortunate that it landed on April 1st, but we're going to do a live stream Q&A tomorrow, Wednesday, April 1st. It'll be at 6 p.m. Pacific time, which is 9 p.m. Eastern time. And I do apologize for any of you that cannot make it. Obviously, it'll be recorded and then posted as well. And so if you want to go back and watch it afterwards, you can. But if you want to participate, it'll be an hour long from 6 to 7 p.m. Pacific time, and then from 9 to 10 p.m. Eastern time. Tomorrow, Wednesday at April 1st. The general theme, the focus is going to be how to kind of prepare for this global monetary reset that we're seeing start to unfold right now. We're going to try and keep it focused on practical application type questions. So that's kind of the focus, but obviously I am open to any financial questions whatsoever. So this will be the first live stream that I'm doing, so I'm going to apologize in advance. I'm sure there are going to be some sort of technical issues, technical errors, and we'll try and work those out as quickly and smoothly as possible. And I appreciate in advance your patience with that tomorrow night. And one last thing, I've got my options course linked below if you're interested in learning about how to trade options, especially in these volatile markets, try and make some money or hedge your portfolio. Check out my options course. It's normally $270. I've got it on sale for $37 right now. 1 week left of that sale. You can get it for $37. It's linked below. Check it out. Hope you all can make it to the live stream tomorrow, April 1st at 6 p.m. Pacific, 9 p.m. Eastern. Come with your questions. Come ready. We'll be talking about the markets, and hope to see you there. Thank you so much for watching. You guys have a great day.